Hi everyone, welcome to a bit of a personal pension contribution tips that we're going to go through. Try to get these done before 5th April 2025. Got the whiteboard behind me, so I'm going to run through some numbers. Why is it so valuable and how do you keep a lot of money and almost get all your money back? And I'll show you how. Personal pension contributions, you've got to make them between 6th of April 2024 and 5th of April 2025. That's the personal tax year as we speak, as we're recording this, but it pretty much applies for all tax years. So what you do is, irrespective of what you're earning, everyone can do this. You've got to make £2,880. That's the magic amount that you make as a pension contribution. And you can make it as one amount or during the year. Anything above that, you must get advice because the variables change. But for this, nearly everyone can do this. You make £2,800, that's the contribution. I'm going to do it as we're writing down. Hopefully my handwriting keeps it going. So contribution, £2,880. What happens? Our friends HMRC, they give you £720 bonus. That's from HMRC. They top it up if you make a personal contribution. That's a 25% return already. It's not finished. Can you believe this? What else happens? That's you making the contribution. Then the next step is, if you're a higher rate taxpayer, you let your accountant know, or you claim it on the self-assessment, whoever's doing your self-assessment. What happens is higher rate is anyone over 50,000 while we're recording this, and it stood still for a while. Anyone making earnings more than 50,270, they can claim another amount off. So what happens is, this 280 plus 720, they put 3,600 on their self-assessment. I'm going to put this on the self-assessment. And what happens is they get back some money in the tax return. So you end up getting back 20%. So you get another £720 back on your tax return. That's another 25%. Don't you love this? Right? So HMRC pay that back to you via your self-assessment. I'm going to call it SA to save time. Okay, next step. What else is happening? So that's number one. Number two. Number three, at the moment, because I know good old Rachel, I'm not going to mention any more names because I'll get a bit of flack, is that currently it's outside inheritance tax. So what happens is it is actually IHT efficient. So what you ends up happening is that's 40%. So what you've done is you've actually, on the 3,600, you've got 40%. So I'm going to say times 40%. What you've got now is £1,440. I'm going to write it here so everyone understands. And that's an IHT benefit. You gotta love this stuff. Is it finished? No, it's not finished. If you got children, and in the current tax year it was previously 50,000, now it's 60,000. If your earnings were, I'm gonna put it here, earnings are over 60K, you or your partner, what happens is this actually goes against your earnings. So you can potentially save a high income child benefit charge. Wow. So if you earned, say, 6360, let's say 63,360 after making, oh, my bad, get the numbers right. That'd be a blooper, right? If you earned £63,600, it actually, after this contribution on your tax return, it will reduce your income down to 60,000. So what happens is no high income child benefit charge. I think that's how they put it, if I get it right. So you won't have none of that. How cool is that? So you could potentially save money on there, depends on your circumstances, but that's quite nice because depending on how many children you got, the child benefit charge, it gets bigger. So minimum, let's look at this. Let's just add all this up down here. How much have I just saved? The money that I put in. So it's actually, I've saved £2,880 in tax. How much did I put in? 2,000, my contribution. If I get the old red pen, what was my contribution? Let me get it from here down. It was, if I get my arrow right, £2,880. How much has this actually cost me? Zero. But in my pension now, I've got, thanks to all of this, £3,600. This is why you've got to get this advice and make sure you implement. Just remember, this has got to be done before 5th of April 2025, and it's based on your annual amounts. So just make sure if you haven't contributed before or you're not contributing, then you can benefit this. If you are contributing, you just need to have some calculations done, but it's worth it. Does anything else give you 100% return minimum? especially a high rate. I don't think anything gives you, I'm going to put a return down because I love that. Everyone talks about returns and they miss the ones that are straightforward. I hope you found this useful. This is where a switched on accountant tax advisor can make a big difference to your journey to save you tax, get you a rebate, and protect you against inheritance tax and the dreaded high income child benefit charge. Don't you love it?